Hi, in this video, I'm going to make a part 2 of our talking about the financial checkup. So, let's repeat. What is a financial checkup? A financial checkup looks at the current state of your finances to determine what kind of shape they are in, whether you need to make any changes in how you are holding them to stay on track. When do I need a financial checkup? Experts should suggest conducting a financial checkup on an annual basis or after major life events, such as a marriage, divorce, birth, or death. Can I do a financial checkup by myself? If your finances are particularly complicated, you should be able to perform a financial checkup on your own. However, the more complex your financial life is, the more likely that you will benefit by engaging a financial planner or other experts to assist you. A financial checkup can help keep you on track towards your financial goals. After completing your checkup, you will want to begin implementing any changes you have decided to make as soon as practical. When you will be able to relax until it's time, do it all over again. You may visit a doctor once a year to make sure as all is well. But there is something else to pencil on the calendar, an annual financial checkup. If you were on a long road trip, you would stop occasionally and look at the map to see if we're headed in the right direction. An annual financial checkup serves the same purpose. It's an opportunity to review how you have done financially over the past 12 months and make sure you are still headed in the right direction when it comes to managing your money. A good time to check in with your finances is become the end of the year, so you can take advantages of any tax saving strategies. But if you can't fit it in during the busy holiday season, plan on doing it as soon after the new year as possible. Here are the key steps to take when planning money checkup. First, identify your goals. The first step in your financial checkup is evaluating your financial goals. Have you made progress on them this year? If not, there have you fallen short? Can you figure out why? Have your goals changed during the year? If so, receive them and write them down. Next, consider what the money goals you would like to set. For example, you may want to fully max out your 401k at work or add another 10,000k to your emergency fund. Establish clear goals and break down the section steps you need to take monthly, quarterly, and annually to reach them. Second, evaluate changes in your personal situation. Have changes in your personal situation taken place in the last year, or do you anticipate any major changes in the near future? A job change, divorce, adding a baby to your family, retiring, buying a horse, getting married, or moving can alter your income and your lifestyle significantly. You may need to adapt your budget, your spending, your savings, and your investments. Your tax filing could also be affected if you are added to your family or you have seen a major increase or decrease in your income. Having time to plan for these changes in advance will make the transition much smoother. Protect your assets. Next on your manual financial checkup to do list is considering now how well you are protecting your assets. Start by reviewing your homeowners or renters insurance, health insurance, auto insurance. Don't forget to protect the greatest assets of all, your income earning ability with long term disability insurance. Tip: while reviewing your insurance coverage, also review your premiums. Consider whether you can save money by switching to a different career or bundling your various insurance coverage together with the same provider. Fourth, prepare for the unexpected. Review your will and, if applicable, your estate plan. Have any changes take place that requires updating? If so, you may need to update your will. Also review your life insurance coverage to make sure you have a large enough policy to protect your loved ones financially if something should happen to you. And if you don't have life insurance yet, that's something to consider getting sooner rather than later. The younger and the healthier you are, the lower your premiums are likely to be. Meet with a life insurance agent and discuss whether a term of permanent life insurance policy is the best for your situation. Fifth, evaluate your investment performance. Calculate the return on each of your stocks, bonds, or mutual funds. Are you satisfied with their performance compared to the rest of the market? If you don't believe the investments will recover its losses, it may be time to sell the dogs. The end of the year is a good time to harvest tax losses. Harvesting losses allows you to offset the capital gains on your investments with losses stemming from underperforming investments. This strategy is effective in a taxable broke out account since investments in a 401k or IRA are already tax advantaged. Warning: watch out for the wash sale rule when harvesting tax losses. This year's rule states that any new investments you purchase within 30 days you're selling an investment to harvest losses must be substantially different. 6. Evaluate your debts. As a part of your annual financial checkup, consider how well you are doing with managing debt. Specifically, evaluate your debt to income ratio. Has your credit card debt described this year? If not, it's time to figure out where the leaks are taking place and try to plug them. It's difficult to get ahead the invest when too much of your income is going interest and payment on credit cards. How's the interest rate of your mortgage should you consider financing? Even a small dip in rates can make a big difference in the life of your mortgage, but you have to consider closing costs to see if it's worthwhile. So that's all for now. Uh, I'm uh, going to make another video about this. So waiting for you. Bye.